Are you ready to take your business to the next level? Every day there are countless books and articles that are published offering the key on how to make your business a success. It's easy to feel overwhelmed trying to keep up and run your business. That's why Deb Creer created the Business Power Hour. Keep up on the latest trends, best practices, and techniques for how to make your business a success. Let the Business Power Hour do the heavy work for you.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And I love that this program is right at the first of the year because we're going to be talking about something that people ignore. They don't think about. They don't think it matters. And it is the most important part of your business, and that is your financial health for your business. I mean, how many times, and I'm going to raise my hand too, have we just kind of thought, it can go, we don't need to pay attention. Got money in the bank, therefore I'm still functioning, right? And so please join me in welcoming my guest today, Avi Pinsky, who's going to be talking to us about how to make sure our financial health is taken care of. So welcome, Avi. How are you doing today?
I'm doing great. Thanks for having me. Really excited to be here.
Great, great. I think you are our first guest who has been in Israel. We might have had one more guest, so we are definitely worldwide. But I love, isn't technology great, right? It's like we're in the same room. So cool.
Yeah.
Well, let me tell people a little bit about you, and then we'll jump into this, because like I said, this is a very, very important topic. So after a decade as a public accountant, Avraham, or Avi Pinsky, CPA, MBT, saw firsthand that small business owners need more than just financial number crunching. They need a trusted partner to diagnose challenges and provide actionable solutions. PinskyConsulting does just that. Avi helps business owners uncover financial roadblocks, gain clarity, and focus on what truly drives growth, profitability, and consistent positive cash flow. Known as the business finance doctor, Avi conducts business wellness checks, analyzing key metrics to identify hidden issues. He then prescribes tailored treatment plans, offering practical, results-driven strategies to move the business forward. By simplifying complex financial concepts, Avi empowers business owners to take control of their finances and build sustainable success. Avi's mission is to help owners turn their businesses into powerful tools for creating a better future for themselves, their families, and their teams. So again, Avi, welcome.
Thanks. Thank you very much for having me. I'm really, really excited to have this conversation and hopefully to share some knowledge that your viewers can really put into use.
Right. Especially here at the first of the year, right? When we should be doing our New Year's resolutions, but we're doing strategic planning for the upcoming year. So,
sure.
I always like finding out from my guests how they got to where they are today. So tell us a little bit more about that.
Yeah. So I grew up in Los Angeles, regular normal kid in LA, and went to college in New York. I took a gap year to study in Israel. And during that time is kind of where I set the foundation for my life from an ideological point of view. And one of the steps in that was trying to figure out, what do I want to do with my life that's going to be useful to people, right? Because, we all know people who have those jobs that are not fulfilling and they're just kind of, it's a job. And that's kind of the way they look at it. It's work. It's supposed to suck, right? It's not, if it was fun, then it wouldn't, nobody would pay me for it. And I didn't really want that. I wanted something where I could find meaning in what I was doing. And so I kind of came, after talking with one of my mentors at the time, I came to this realization of being a financial doctor and being somebody who can really help people in a meaningful way in an area that they themselves don't understand. What we were discussing was personal finance, budgeting, family finances, things like that. But just with my experience in accounting, I worked in the Big Four in the States.
For the big guys.
I worked for PwC, I worked for KPMG, and smaller firms as well in the States. And then once I moved to Israel about 9.5 years ago, so continued to do some of that here. Doing taxes, I realized like that's just not the same type of thing. Taxes are necessary, you call it a necessary evil at this point. But, and so it's helpful to have somebody who can really help you with your taxes, but that's not going to provide meaningful change for your life or for your business.
Right.
So I kind of took that idea of the financial doctor and moved it into the business realm. Whereas, people know that they need help with family budgets, paying their bills, supporting their families. In business, it's the same thing, right? A lot of times people are business owners. A lot of times by accident, they kind of accidentally fall into that role. They're really good operators, so they start their own operations because they want that freedom. But then once they get into the ownership role and the business kind of takes off, the operations are really doing very well because they're really good at what they do. Now all of a sudden they have to take on a new role. They take on new responsibilities and enter that seat of being the owner. And that's a completely different animal that they don't know how to tame.
Right.
So that's kind of where I can come in and help and teach them what it means to be a business owner and how to use the data to really drive your business decisions.
Right. I love it. And one of the things that I hear from business owners a lot is because they are the owner, they should know everything. And, unless you're a financial person by trade, you're not going to know, especially when it comes to taxes and all sorts of things, because, especially here in the US, obviously that changes every year. New tax codes, and then you have to deal with state, local, federal, all of those things. And, one of the smartest things I ever did, and I did this very early on in my business, was I hired an accountant. And still, I mean, she does the taxes, she does all of that, but there's so much more to it. It's not just, hey, here's my books at the end of the year. It's how do you get from January 1st to December 31st and do it in a way that you're not panicked every time a bill comes in or an invoice doesn't get paid. So kind of talk to us a little bit more about how you work with these businesses to get them through every day.
Yeah. So like you said, people think that they have to be able to do it all themselves. And that's kind of how they end up overwhelmed, stressed, and burnt out.
Or broke.
They're wearing or broke, yeah. Because they're essentially wearing every hat in the business and all the decisions are coming across their desk. And that's really not the way to run a business. And if you look at the bigger businesses in the world, Google's, the Yahoo's, Apple, all those big brands that we're all aware of, they're not running their business that way. The CEO doesn't have everything coming across their desk. Right? No matter how smart that CEO might be, there's not enough time in the day.
Right.
So you have to figure out a way to put into place into your business the same types of systems that they have going on in their businesses, right? Those are the ones that are successful. Those are the types of successes that we're chasing, right? Maybe we don't have dreams on getting our small business to that level of being, a Fortune 500 company. Maybe you do, maybe you don't, I don't know. But if you want to look, there's a blueprint for success in business. Those companies have it. Right. If you don't have that same blueprint, so why not, figure out how to get it and use it. Now, where your accountant comes in, it's important to have somebody who's looking at the numbers and doing your taxes, doing your books. That's obviously very crucial. Excuse me. Unfortunately, it's not sufficient, right? You need somebody who's going to look forward in the business because your accountant and your bookkeeper, they're looking at the past, right? This is another aspect. Exactly. They're reporting to the IRS. They're doing the compliance work. And this is kind of where the doctor analogy even, really thrives, I think, in my opinion, is to really paint a picture for what I do, is that your doctor has to take your vitals occasionally. They'll take a urine sample, they'll take a blood sample, they'll run tests, they'll see what your weight is, they'll measure your height, your BMI, all those wonderful things. And those are numbers that talk about the past, right? And they're useful to gauging the future if you know how to understand them.
Right.
So your accountant is looking at the past, they're putting it into these fancy little financial statements, these little reports, wonderful, and they give them to you and they say, here you go. And you look at it and you're like, well, I have no idea what any of this means.
Right. So
They've got a certain amount of exactly. And you sign on the bottom line for your tax return and then you move on and you didn't do anything with it. Now, if a doctor is doing that for you, find a new doctor, right?
Right.
You need a doctor who's going to help you look forward and say, here's how you fix it.
Right.
Right. You've got high cholesterol. You've got low cholesterol. This is what's wrong. You don't have enough of this, red blood cells. You don't have enough platelets. If you are not a doctor, you don't know what that means. So you're getting this information from your doctor, which is all nice and good, but what are you going to do about it? So they'll tell you, eat more of this types of vegetables, do more of this types of exercise, walk more, get 10,000 steps. He has to give you a treatment plan in order to get better. Now, most accountants are not doing that. Right? Because they're so busy reporting on the past, doing the compliance work, looking in that rear view mirror, if you will, that they're not helping you drive the car forward, improve the business, make it more healthy.
And
so you need somebody.
What are new products and services that you want to offer? Do you want to bring on more staff, expand? They don't care.
Exactly. Yeah. Their job is to report what happened and to take an accurate history. Again, the accurate history is important so that you have data on which to build the future. But you need somebody in your corner who can help you make those decisions that are going to build the vision, move the business forward towards where you're trying to get it to. So that's kind of where I come in. I help people crystallize their vision and find that path forward based on what happened in the past.
Right. I love that, and I think we really do just not plan. We just don't even think about it. It's just, we're going to keep going. And part of that is because we're in the day-to-day grind, even if you love it, of doing the business. You're not stopping.
You're in the thick of thin things.
Right. And of course, we saw 5 years ago, almost 6 now with COVID, that so many businesses failed simply because they had not, well, first of all, they didn't have enough money in the bank. But more importantly, they couldn't shift. And granted, there were some that there was no way they could shift. I mean, if they were a true, in-person customer base type of thing, they couldn't shift. One of my favorite stories. So I'm in Atlanta, and all of the whiskey distilleries are north of us, right? And so Jack Daniels, the big guy, they could not produce whiskey during COVID, even though many people would have considered that an essential item. The government didn't, right?
It's very essential service.
Yes. Oh, yes. And so what I loved was they switched and started in their bottles providing hand sanitizer.
Yeah.
And, and so then it became essential, and they kept their employees hired. I mean, all of those things. And, but I don't know. I mean, Jack Daniels is well over 100 years old. I'm pretty sure it survived Prohibition, all of those various things. So it seems like they are very good at planning. But that really was something where I'm sure they thought, oh, crud, what are we going to do now? And of course, the key was that they did have the financial resources to be able to make some changes. But they also had that visionary thought. And I loved here in the States, we were told, oh, it's 2 weeks. We're going to shut down for 2 weeks. And we all went, yeah, right. And of course, in some cases it was a year, depending on what. Yeah. And I was looking at pictures on Facebook the other day, and I thought people were still wearing masks a year later. But anyhow.
More than that.
Oh, yeah. And I still wear one on an airplane, right? But yeah, they had the vision to think, how can we get through this? And I think that's where so many companies stumble is I got to keep doing this. I got to keep doing this. Maybe I'll do that, but I got to keep doing this. I got to do this.
Yeah, for sure. And it's not just a matter of having the vision, but being able to play out the scenario and see, is it worth it for us?
Right.
Because let's face it, if you're a whiskey distillery, you've got inventory for years. If you shut down production for a couple months, maybe it'll hurt your business in a couple years from now when you're going to run low on a specific aged, level of aging. Okay. It's not going to cripple your business tomorrow. So you do need to take a little bit of a risk analysis when you're doing that as well. What does it do for our product if all of a sudden, maybe now we're going to be known as the hand sanitizer whiskey company? Who wants to be drinking hand sanitizer whiskey? That's not going to sell very well. So you kind of have to play out different scenarios as well of, well, if we do X, what does that do to this product, that product? If we raise this price on product A, how does that affect product B, C, D, whatever? And that analysis is certainly not going to be done by your accountant, right? It's definitely not something your accountant is helping. Yeah, for sure.
Even if it's somebody, now if you've hired them and they're an outside third party, they're not going to know. But even if they are, an employee, or, I know that you do CFO fractional, but even in all that, you don't always get all that information.
Yeah, for sure. But more importantly is that's not their perspective, right? An accountant's perspective is, look, I'm telling you what happened and how profitable you were, how much you made, how much you lost. I'm not thinking about the future, because I don't have the headspace for it.
Right.
And I don't have that's not in my job description. And it's not that's not taking my brain power. My brain power is all focused on reporting the past. So you definitely need somebody on your team who can help you with that visionary focus and playing out those scenarios.
Well, and what just flashed into my brain is an accountant is not a financial planner or a CFO or something like that. Because they are thinking, they have a different skill set. And, and so I think that's the thing that maybe people first need to really think about is, do I need that CFO? Do I need, somebody internally who knows those things, besides trying to get it out of my brain where it doesn't even really exist?
Yeah, for sure. Definitely.
And I talk to businesses all the time. And one of the things that never ceases to surprise me is, and again, I think we really saw this during COVID, they have no idea what their financial status is. And I always remember way back when I was a little bitty girl. Actually, I went off to college, and my mother sent me a cartoon, she cut it out of a newspaper, that type of cartoon, right? And she was trying to teach me a lesson. And the cartoon said, "But I can't be broke. I still have checks." But, I think, because I was like that. But Mom, how can I not have money? I still have checks.
Credit card.
But I think so many businesses, we hear about people who go from paycheck to paycheck. I think so many businesses do that also. They don't really know what their financial status is. And so talk us through let's just do some of the basics. What do they need to know?
Yeah, 100%. And some of them might know their numbers as their accountant is giving it to them. As we said before, most of them probably don't. Most of them look at it and they're like, hey, what do you mean?
That much money?
Yeah. But they don't realize that what's presented on those financial statements are important for accountants. It's good for bookkeepers. It's not good for a business owner. That's not the relevant information that you need. Excuse me. You as the business owner need to know why those numbers are the way they are and what to do to change them. And then ultimately how it relates to the cash on hand in your bank. Because just because you're profitable on paper, right? You might show $1 million of profit in your business one year. And there may be some of your listeners who this resonates with 100%. So they might look at their 2025 in I guess it's now in a couple of days, but if you're listening to this a couple of days ago, and they're going to look and they're going to see $1 million of net profit for 2025. And then they're going to go to their banker and they're going to say, Mr. Banker, I need $1 million. I have to renovate my house. I have to pay my car payments. I have to pay my kids' tuition, whatever it is. And their banker is going to say, I'm sorry, sir, but you don't have anything here for us. Or maybe you have a negative balance, maybe you're over withdrawn. So how do you make that connection between what the accountant is telling you and what the banker is telling you? Right? That's a whole different world that you're most likely not going to see on those financial statements, right? There's a whole different statement that most people aren't shown. And if they are shown it, they understand it even less than they do the P&L. And that's called the statement of cash flows. And it's much more complicated than the P&L or the balance sheet or the income statement, if that's what you call your P&L, whatever. So understanding how you get from that profit to the bank is basically going from theory to reality. Big accounting statements, the income statement, the balance sheet are very theoretical. right? A lot of it is based on certain assumptions that can be changed. It's based on things that are probably going to happen, that, maybe will, maybe won't. There's a lot of assumptions and theories that are put into practice when creating those documents. When you look at your bank statement, there's no theory there. You either have the money in the bank or you don't. And your accountant is probably not showing you that because they're spending time. I know we've been trashing on accountants this whole time. I feel bad doing that because I am one.
They do serve a very good function.
Yeah, they do serve a function. It's necessary. It's 100% needed, and you need to have a good one. You just need to know that it's not enough.
Right.
You need somebody who can help explain to you how to get from that theory of the P&L into the reality of you have no money in the bank. So let's start with basics, right? You asked what's a basic thing that people should know. Basic thing people should know is the CCC, the cash conversion cycle. Okay. What does that mean? It's essentially how long does it take from day one when you lay out cash to pay your employees, to buy your inventory, to buy your materials, to whatever it is that you're paying for in your business. Day one you have an outflow of cash. How long does it take before that money comes back in?
Okay.
Right. So the amount of time it takes you to build the inventory from the materials, how long it sits on the shelf until somebody pays for it in the store, until the credit card company actually processes the payment and deposits it into your bank.
Right.
Right. You need to be able to cover all those expenses during that time. If something's sitting on your shelf for a month before it's sold, and then you're waiting another week or 2 weeks until you actually get the money in the bank, what is a month and a half of expenses that you're not?
That's a 6
right, that you
turnaround.
Yeah. Where are you getting the money for to pay your electric bill and to pay your employees and to pay your rent for your office and to buy new material during that 6-week period? So you have to know how long is that period, and you have to know, do I actually have the cash on hand to cover that amount of time? If you're a doctor, I've had this with people before that I've dealt with. If you're a doctor and you're charging through insurance, well, insurance is going to take a few months before they pay you. Might be 2, 3, 4, 5 months. Who knows what? So if you're exclusively servicing people through insurance, so that's going to stretch out that cash conversion cycle because you're still paying your doctors, you're still paying your secretary, you're still paying your rent, your electric bill, your water bill, everything, right? You're paying for that to cover the amount of time that it takes until the insurance company finally, gets things moving and gives you some amount.
Of course, you're not getting paid 100%. Excuse me. There's always going to be, ones where they're saying, no, this wasn't coded right. This wasn't whatever.
Yeah,
so,
for sure.
So you've got all of that goes in there too.
Yeah. So I had somebody, this is a funny story. Somebody, he came to me with an Excel, said something's wrong with the formulas here. I'm not sure what it is, whatever. Can you help me figure it out? So we figured it out. It was a very simple mistake that he made. Whatever. I don't want to get into that. But he was trying to put together a theoretical business, doing the back end for different medical practices, where he was basically going to be the HR to these people's private practices, and he was trying to forecast what the cash flow would look like for 3 years, and the assumptions that he was making based on the way that he was trying to grow and the pace at which he was trying to grow this, he was never ever going to be cash positive. Because he was constantly growing, taking on more clients, taking on more things.
But that churn was
the churn was always four months later. The assumption was he's not getting anything from insurance for 3 or 4 months. So it's like, okay, by the time that month 1 is getting paid now we're in month 4. Well, now all of a sudden you're 4 times as big, and you've got now even more receivables coming down that are tied up in insurance. Right. So he was just never. If you have $1 million sitting in the bank and over the next 3 years, you want to turn it into 10 million. So fine, this might be a legitimate way to do it. But if you're starting with 0, you're never, ever going to catch up here. So just a little bit of knowledge on how business is run from a cash perspective, right? Because it's a very nice to be profitable on paper, but you can't pay your bills, your family bills.
With your bank statement to the power company. They're going to go next.
Exactly. When the bank comes and says, pay us your mortgage. When the school says, pay us your tuition, when the car payment is due,
there's
you can't say,
one thing they accept.
Yeah, exactly. You can't be like, well, I've got a receivable from this client. You could take that one. Electric bill, you'll get paid by this client. They don't care. They don't care.
No.
So if you don't have the cash on hand, your business is not gonna do what it's supposed to do.
Right.
It's not gonna function the way that it's supposed to function, which is paying your bills. That's why you make a business, is so you can take something out at the end of the day. And if there's no cash to take out, there's no cash to take out.
Right. That reminds me of a story many years ago when I still lived in Colorado. I am a public speaker and I charge for it, right? This is not, and so as a friend told me, I need to say I am a professional speaker because that signifies, hey, they were going to ask for money. But I had pitched doing a program to one of the chambers of commerce. Now, I belong to them. That was why, I wanted to speak to them. And, we're getting a date down, all of this stuff. And then I said, here's my fee. And I got crickets, right? And I said, is there a problem? And we were actually on the phone when we were having this conversation. And they said, well, we assumed that you wouldn't charge us. I said, no. And I think I said something like, I do give a discount because I belong, whatever it was. And then they told me, well, you love what you do so much, we assumed you wouldn't charge.
Oh yeah, for sure.
And I said, I don't think I can pay my bills with that.
Yeah. I think Madonna loves to sing. I think so does Beyonce, because they loves to do what they do. Yeah. Michael Jordan loves playing basketball.
Yeah. They still didn't pay me, but what I worked out was basically a barter. I got a membership.
Okay.
Right. And so that works, right? But somebody still needs money. I mean,
Yeah.
And that's the thing is, we have to know and what that cash flow is. And part of that obviously depends on who the client is. I mean, you were talking about doctors having to get payment from insurance companies. Many years ago, I worked for a company and we were government contractors, federal government contractors. We wrote software for the government. Now, all of our invoices, and I was the person in charge of this, they were net 30, right?
Okay.
We were doing good if it was net 120. They just, and part of that was, I didn't cross that T right, or it just got lost in the red tape and all of that. And so we just planned on the fact that nothing was going to get paid. Fortunately, we had a really good line of credit because, we were a very well-established business, but it was annoying that we had to continually dip into that line of credit and make those phone calls and say, hey, you need to pay me. And, all of this, but that's just business, but we knew that our clients were not going to pay on time. I mean, and they just weren't.
For sure. Yeah. I mean, with lines of credit, so, just that's essentially another word for debt. And a lot of people are scared of having debt in their business.
Right.
Something that you have to,
thing, right?
Yeah, you have to know it's something that if you know how to play with it, it can be perfectly fine, right? If you know you have certain money coming down the pipe and you know that it's, you can rely on it to pay off that debt. So sometimes it's a perfectly legitimate way to cover that gap from that CCC, that cash conversion cycle that we mentioned. But again, it's playing with fire if you don't know what you're doing, if you don't have somebody who's helping you make those analyses. But if you do know what you're doing, it's a perfectly legitimate tool. So it's certainly something that you can use when needed.
Right. And again, you have to know your clients. I was telling somebody this earlier today. So for a long time, my invoices were net 30. And nobody ever paid on time. They were all at least a week late. So I looked at my cash flow and kind of did the mental. I don't think I even wrote stuff down. See, I'm one of those bad people. But I changed my invoices to net 15. The funny thing is they almost always pay on time. And I don't know why that is. And I did notify them, hey, our terms have changed. And it was really strange because they do almost all pay on time. And when they don't, it's been, oops, the invoice got lost or, whatever. I mean, there's been a pretty good reason for it. But just shortening that time frame made them pay attention. And I think that's the other thing is we don't pay attention. It's like, oh, that bill was due last week. Because we're doing the grind of doing the job.
Yeah, definitely had another client like that where they had accounts receivables that were just blowing up like crazy, month after month, and they didn't know why. They first of all, they didn't even know that it was going on. Because as we said, your accountant is not making these analyses and telling you these things. They're just reporting. Their job is not to bring up the red flags. Their job is to say, this is the number, and that's the number because that's the number. So I peeked under the hood. Didn't take me very long to say, hey, what's going on with your account receivables? Because these are a little ridiculous. Right. And again, just a little bit of an analysis by somebody who's informed can make you aware of huge problems. What was the problem here? Their invoicing software had a little checkbox that said, when you're creating a new invoice, that said send invoice to client. And that box was defaulted to not being checked, and they usually didn't.
They weren't even sending invoices.
So they weren't even sending invoices a lot of times. Most of the time there was no invoices being sent. And that's just something that's, never gonna be good for a business, because you can have all the terms of,
excuse us, you haven't billed us.
Exactly. You're not gonna. It doesn't matter if you're net 5, net 10, net 5,000. Doesn't matter if they don't get the invoice.
Right, they can't pay.
Time doesn't even start. Right? It doesn't. It's like, well, net whatever doesn't matter. So yeah, definitely you need some sort of insight into what's going on with your invoices. Are they being paid on time? And you need somebody to track it to some degree. Just keeping an eye on it every 2 months, 3 months. Have somebody look and say, is this normal? In our business, is it normal to have such a high level of accounts receivables? And really, that account receivable is part of the formula. If you wanted to get into numbers and math formulas, part of the formula for that cash conversion cycle is your accounts receivables on a regular average day. That number is taken into account. And so it will show up when you see all of a sudden your CCC balloons from 30 to 60 to 90 to whatever. You'll see, okay, well, one of these is off here. Either it's the inventory that's off, or it's our accounts receivable that's off, or it's the debts that we're paying. Something is off here. But if you're not looking at that cash conversion cycle, you're not looking at that number, you're not analyzing it on a regular basis. Again, maybe not you, because you don't want to have another hat on. You don't want to put another hat on your head.
Right.
If you don't have some sort of person who's in charge of the finances to look at this on a regular basis, it's just going to balloon out of control, and you're never going to even know about it.
Right. And one of the things that I've talked to people, and this is one of those, smack my head things. They'll say, yeah, people aren't paying on time. Oh. Well, I don't want to nag.
Yeah,
nice. No,
yeah.
You have to run your business, and it's not nagging to say, hey, Avi, I'm sorry, something must have happened. But you're 10 days past due. That's not nagging. That's doing business.
Yeah, for sure. It's a matter of thinking that every yes you say to somebody is a no to somebody else. And every day that you give your customers that essentially you're giving them an interest-free loan is another day that you don't have the money to buy your kid that toy, or to buy groceries for your family, or to pay off, whatever it is that you need to pay off for. All right. If your kid says, well, can we go out for ice cream? You say, sorry, I don't have the cash for it because that customer hasn't paid yet. Well, so you're saying yes to the customer. You're saying no to your family. And is that a comfortable conversation to have? Is that you're better off with that? Like, people expect that when you provide them a service, that they expect that they're going to have to pay.
They know that. And they're not going to walk out of the door without paying.
I mean, nowadays you never know. It seems like some people, more and more people are doing that each day. But if your clientele don't expect to pay you, I'm sorry, you're fishing in the wrong pond. You're dealing with the wrong clientele.
Right.
Get a better class of clientele.
Right. Yeah. And folks, please don't put your employees in the position that there's an issue. Yes. More than once I've had issues where, there was one time where I worked for a company, and the people came to repossess the copy machine because it was a monthly payment type of thing, and we'd gotten behind on it. And I think it was me, wrote a personal check to keep the copy machine, right? And I was just an employee. Or same company, I went, their holiday party, And it was funny because I wasn't even an employee. I'd given notice, and they very nicely let me come to the holiday party. And, they came and they, here's the bill. And the guy gets out his American Express. And they said, "Oh, sorry, sir, we don't take American Express." And he said, "Well, that's the only card I have." And they turned around and they looked at me. I went, "Oh, no, no, no. I don't work for you anymore."
I did the copier. I'm not doing the holiday part.
You go to do something and somebody says, "No, you have, your employer has not paid this other bill." Don't do that to your folks. And I mean, and it doesn't matter if it's, a 2-person shop or, many thousands. I've had that happen. And just don't
Yeah.
do that to your employees.
Yeah. Or be late on payroll, right? If you're late on cash, how you paying your payroll? That's also, another way that it comes to hit your employees for sure.
Yeah. So, what are the things that we really need to pay attention to that will dramatically, I'm using that word, dramatically increase revenue in the upcoming year?
Okay. So revenue, is different than what we've been speaking up until now. Up until we'd be talking about cash, and profit. Revenue has its own thing, which are really, really not presented on any financial statement. Forget about the difference between profit and cash. That's like, okay, those things are theoretically available to you if you know what you're looking at. Revenue is a whole different beast, right? I like to look at 5 things that essentially create revenue. And this applies to every business across the board, in any stage, any size, any location in the world, right? Anything, right? The first thing is potential customers that are out there in the world. How many leads are you in touch with?
Okay.
Right? Are you in touch with 100 leads a year? Are you in touch with 100 leads a month? Right? How many leads how many eyeballs can you get on your business? The second thing is your conversion rate. What percentage of those leads can you actually turn into actual clients, right? Are you a really great salesman? You get, 90% of your conversations lead to sales. Are you a really horrible salesman and you're only closing 2% of your leads? Now, what's going to be considered good? What's going to be considered great, bad, horrible, whatever, is going to be highly dependent on industry, right? Some industries doing 50% is going to be amazing. And some industries, doing 80% is like, well, what's wrong with you? Why can't you get into 95, right? So these are obviously things that are dependent on your industry, your size, your experience. But these are just the elements to keep in mind. So that's the first 2, the amount of leads that you can get, and then the percentage of them that you can close, essentially. Those are all obviously nowhere on any financial statement.
Right. That means you need to be talking to your salespeople. And
exactly.
If you're the salesperson, you're going to know these things. Yep.
You need to track it somehow, and you need to be analyzing it somehow.
Right. And it can't be, but I got 500 likes on my Facebook post. No.
For sure. Yeah. We could talk about that because that might be a metric at some point. You could discuss.
It is the eyeballs, right?
Yeah. We could say, I want to go through the 5, and then we can get back to that and how it actually could translate to something that's useful for you. The third one is your retention rate, right? How many previous clients have come back to you throughout the year? Let's say you're an ice cream parlor. Do you want your clients to be coming back once a week? That's great. If you're a restaurant, if you can have a regular customer that comes once a week, amazing. If you are, let's say, a mortgage broker, you're not going to have the same client more than once every, maybe few years if they upgrade regularly. It's most likely it's going to be once in a lifetime for most of your clients. So your retention rate, again, is going to be very dependent on the industry as well. But it's a factor in how much revenue you can generate. When you take the closing rate, right? So that leads times conversion rate, and then the retention rate, how many previous clients come back, you put all that math together, and that gets you to basically your total customer base that you can assume for any given year, right? How many total customers are coming into your store, your shop, your whatever it is, your widget factory, throughout the year. So the fourth factor is then going to be, what's the average transaction value? How much does a normal person on average spend for each time they visit your store? And then the fifth is going to be how often, right? The purchase frequency. Are they coming once a year? Are they coming once a month? Are they coming once a week? You add up all those numbers together, you multiply where you need to, you add where you need to, and that gets you to your total revenue for the year. And if you can set targets on that, set goals for that at the beginning of the year, which, now is the perfect time to do it, right? January is the time where you want to start looking forward towards what do I expect to get out of my business this year. So you can set targets for those 5 numbers, do the math, and you can have a target for what you expect to be your gross revenue for the year.
Right. And those
But
numbers.
none of those numbers are in your financial statements. Not any of those 5.
Right.
None of them.
And like you said, it varies. The ice cream thing, right? Maybe people spend $5. Doesn't seem like a lot, but if you have 1,000 people spending $5, I can't do that math in my head. That's pretty good. But then, like you said, are these, are 500 of those people who come in every week, or are you in, say, a tourist area where it's new people every single time? Because then that also affects things like your advertising, your Facebook posts, all of those things. Because, if you've got a high reoccurring rate, as long as you're providing a great service, a great product, they're probably going to come back. Now, I always
Can I tell a story on that quickly?
Oh, yes.
Okay, so like I said, I'm originally from Los Angeles. In Los Angeles, there is I guess it's also now in New York at this point. There was a competitor to Starbucks, Coffee Bean and Tea Leaf. I don't know how big they are now. I've been out of the States for a few years now, so I don't know how big it is now. But when I was growing up in high school, it was primarily in California and in Los Angeles. And so there was one that I really liked to frequent when I first got married. So my wife and I were in LA for 1 year while I got my master's at USC. Fight on, go Trojans.
Go Flaps.
So I just went there for grad school for 1 year, but I don't know. I fell in love with the whole culture. It was great. Excuse me. So we went, there was one Coffee Bean that we like to frequent, and they had on the counter, they had their customer of the week. And the customer of the week gets like, free coffee or something. And so we asked them, like, what does it take to be the customer of the week? What is someone like that? Again, we figured, okay, it's maybe somebody who comes on their way to work every morning and gets a coffee. They get a coffee a day. Perfect, right? That's a great customer. You come in 5-6 times a week. You tip generously, whatever. All the baristas by name. Great. They said, well, it's usually somebody who's coming in like, 3 or 4 times a day. And, and they know us all. They're like buddy. And it's like, that's a whole different like level of customer retention, right? You think that if you're an ice cream parlor, it's great if somebody comes once a week. A coffee shop, Starbucks, somebody comes once a day. Could you imagine you get to a level of customer retention where you're regularly having people come in multiple times throughout the day, 3-4 times a day, and enough that we can have a different one of them every week be our customer of the week, right? So even if you're only charging that guy $5 for each cup of coffee, right? $5 times, let's say 3 a day.
Yeah, 15.
Yeah, you're at 15, $20 a day times 5 days a week. You're making $100 off this guy every single week. That's $5,000 a year, right? Yeah. So if you're that kind of business where you can get that kind of retention, that kind of loyalty, so that's part of that target setting when it comes to, what are my goals for the year, right? And you can factor that into, well, what changes can I make to my business? How can I make it more comfortable here? How can I make it more enjoyable here?
Right.
How can we train the employees differently to create that type of customer loyalty? How much do we have to invest in the training of the baristas to get that customer loyalty? And then, maybe it's worth spending $10,000 on employee training, right, if it's going to be bringing in multiple people that are spending $1,000, or what we said, maybe $5,000 a year, right? So I get 100 people like that. There you go. I'm at $500,000. I only spend $10,000 on the training.
Right.
It seems like
else is just kind of cream, right?
Yeah. Exactly.
Right.
So so that's just one way that you can use these factors to drive that decision. If you don't know that there's such a thing as somebody who comes and buys coffee in one shop 5 times a day or 3 times a day, if you don't know a person like that exists, which again, me and my wife, we were shocked. Yeah. We were shocked to find that out. We were like, oh, it's somebody who comes in every day, right? Yeah. They're like, no.
On their way to
multiple
work,
times.
Mm-hmm.
Yeah. So like, if you don't realize that kind of recurring revenue can exist, it's going to severely limit whether you're willing to pay that $10,000 for that employee training.
Right. And I think so many companies, and obviously, again, it depends on the business, they don't even think about customer loyalty. And, and I don't know why this popped into my head, but you would have been here in the States when Cheers was on, right? Certain person
Cheers predates me a little bit.
I've
seen clips.
Right? everybody knew who the regulars were.
Where everybody knows your name.
Yeah. I mean, that song was not an accident. But yeah, and I love it when I walk into a business. Now, it's funny because of COVID, I stopped going to Starbucks, saved a lot of money, right?
No, for sure.
But when I go into a business and they call me by name, that is so impressive. I travel quite a bit, and one of the things that hotels have started to do is, and I was just fascinated with this, is hour or so after you've checked in, you get a text message. Hey, this is Bob at the front desk, just making sure everything was okay. And then every day that you're there, is there anything you need? But when they call me by name, I'm really impressed. Now, most people remember this red hair. And so, that is kind of the thing. But yeah, it doesn't take all that much to develop kind of a customer loyalty thing. And really just calling somebody by name is huge. I go to a doctor for cancer treatments every 21 days and have for 10 years. And they had this young lady at the front desk for several years. You walked in and she said, "Got you checked in, Mrs. Creer." And she did that with every single person. Which, I mean, how many people go through that doctor's office, every week? And she moved to a different office.
Oh, no.
And of course, when they didn't call us by name, we were like, huh? I mean, this poor young woman who started, she had no idea who we were. But that has been, and I said something to them, and they said, "Oh, it's our goal that we can call you by name." And I mean,
It's good that they have that in their sights.
Yes. And that just means so much. Now, obviously, I'm there every 3 weeks. A lot of people are there every day, things like that. And so, if you were only somebody who went into the doctor, luckily maybe once a year, they're not going to remember your name. But, what can you do to do that? And of course, so many things now are automated. So you should be able to pick up on, oh, hey, so-and-so has an appointment at 2. I'm going to say, "Is that you, Avi? Glad to see you again," right? And, you might say, "Well, who?" Yeah. And that type, now it does take training, right? And a certain type of person. I mean, I am doing good some days to remember my own name, let alone somebody else's. But, that doesn't cost a lot, but it means a lot. And so I think that's one of the things that any type of business really can think of, or like even just like something online. How frustrating is it when you get an email from a business and they don't use your name?
Yeah.
If it's just CRM, you've got your name in there. Or worse, dear first name. You're like, oops.
I got a message. I got a message from somebody, a voice message on WhatsApp, and clearly it was just mass sent out to everybody. No personalization whatsoever. It was just like, "Hey, I'm so glad that you're supporting what it is that we're doing." Okay. So you don't know who you're sending this to.
Right. Yeah. And it is pretty simple anymore with all of technology to be able to personalize things.
Sure.
And does it take a little bit more time? Yes, because you're entering all that information in, or you're asking them to enter it, or whatever it is. But yeah, I mean, just that thing. And well, they say, that the sweetest thing to somebody is their own name. And then my other favorite is, so like on LinkedIn, I'm Deborah, but then I have, much like you do, right? In parentheses, Deb. And I get a kick out of it when I get something and I know they've pulled it off of LinkedIn, because it's Dear Deborah Deb.
Dear Deborah. It's the guy.
I'm like, nope. And the thing is, at that point, I do not care what they do, what they sell. They're deleted just like that.
Exactly. Yeah. 100%. I'm the same way. I get those messages. If it's to Avraham, maybe they typed it out. But if it's got both names on there, for sure not.
Oh, yeah. Well, and you have a unique enough first name that how many people misspell it, right? And you become Abraham. I'm guessing that would probably be, And then you're like, no.
It happens. It happens.
Or somebody's going to do Deborah, Debra, right? Because that's a variation. No, they don't
No.
know me, and I'm not going to spend my time even trying to figure it out.
Yeah, for sure. For sure. Yeah, you have to make your customers feel well if you want to attack that recurring revenue aspect. If that's something that in your business is important, you need to put in the effort for that. You need to have good service. You have to have memorable service. You have to make them feel good. Um, Again, assuming that's a lever in your business that you want to be attacking, that you want to be pulling, you got to figure out how.
Right.
And not only is your accountant's not letting you know how, he's not even letting you know how many of your customers are recurring, how many of them are new, how often
He doesn't have those numbers.
yeah, he doesn't have those numbers. It's not in your financials. It's nowhere for you to be found if you're not going to track it yourself.
Right. And even if you've got a much longer cycle, you can still be doing this. I know somebody here in Atlanta. I networked with him, and he is a realtor. And for, I didn't buy a house from him, but because we networked together, he put me in the database every month for over 12 years. I get an email from him. Right. And it contains things, and I get mailings. I mean, like once a year, he mails the calendar of the Atlanta Braves. Well, I don't care about the Atlanta Braves, but I'm like, okay, well, this is kind of, and so his method is to keep you kind of top of mind, right? And when the time comes that I want to sell our house, he'll probably be the person we go to, because he has just consistently provided a little bit of information. Hey, this is a new school that's opening in your area. Did you know that this tax rate has changed? Whatever it is, he's got something that he's sending every single month. And yeah, I mean, I frequently don't even read what he sends, but it's in my head. Yep,
Still top
he's
of mind,
sending
for sure.
Yep. Yeah.
I mean, that's essentially what marketing is all about, right? Your marketing dollars. Right. How do you even know if your marketing dollars are working? Right. Like we said before, how do you know if those likes on Facebook and on LinkedIn and whatever other social media is out there? Who knows? By the time this message airs, there may be a new app out there that's taking a start. So how do you know if those likes and those reshares and all that, is it translating to actual revenue in your business? Right? Are your marketing dollars even working?
Right.
Not tracked on the financials, but you need to know, because you're probably, if you're like most business owners out there, you probably have multiple different avenues through which you are trying to get new clients in the door, new leads, recurring revenue, whatever it is. You need to stay top of mind, and that's done by marketing. So are you making a wise investment in Google ads? Are you making a poor investment in Google ads, right? Are your Facebook posts doing better? Or are your LinkedIn posts doing better? Well, if you're not going to track that, right, one of the first things I ask anybody who makes any appointment with me is, hey, how'd you get here? How'd you come across me? Yeah. First message, if anybody here connects with me on LinkedIn, and I didn't do this with you because I knew exactly where you found me from, and we knew each other before. There was already an interaction there. But the first question is, hey, so-and-so, how'd you come across my profile? Right now, 99% of the time, it's, the algorithm brought me here, which is,
you popped
fine.
up as
That's a fine answer.
person you should connect with.
Yeah, there you go. But maybe not. Maybe they heard me on the Power Hour podcast. Well, I want to know that, because I want to be able to invest in the things that are working, and I want to cut back on the things that aren't working. Because if I'm doing a Google ad that never gets any eyeballs, and it gets me eyeballs, but it never gets me any business. Maybe it gets me leads in the door, but none of them convert. Why am I wasting my money there? Why am I putting my time and effort there? Right? Those are dollars that could go somewhere else. Right.
And and so many people, because I am a marketing person, they say, well, Facebook is free. No, it's not. It's still your time.
It's not free.
All of those things. And,
time is very not free. Time is the biggest killer of a business owner, right? The biggest problem that you have in your business is that everything is coming on your plate. So, Facebook is free, so I'll put that on my plate also. No way. If there's no return on that time, absolutely don't. No way.
Right. And way back when I was in marketing school, we were taught, and this was before Facebook and, all of these things. And so it was still much what we would call traditional marketing, right? Newspapers, magazines, TV, all of those things. we were told that someone had to see your message an average of 7 times before they could take action. And now I don't even know how high that number is. It's got to be, because it just flies past us so fast. And of course, we ignore it. I don't pay attention to the furniture ad until I need furniture. But yeah, it is kind of there is though that repetitive thing, like I said, with that realtor.
How many ads is somebody seeing on Facebook that are just not relevant to them?
Right.
Or maybe they are relevant, but they're seeing 5,000. I've gotten so many Facebook friends requests lately where I hit accept. Within 2 minutes, I've got the same exact message from all of them saying, hey, I can help you with SEO. You need help with SEO? Do you want SEO? SEO
is really bad.
Sorry, not looking for SEO, but I've got 20,000 people that want to do my SEO for me. So, you're inundated with so much of the same stuff all day long. I would be shocked if 7 is the magic number still.
I would guess it's over 20 at least. Well, and placement is a thing. We're not too far from a big jail here in Cobb County in Atlanta. And I got a kick out of this. I actually checked it out. There's a billboard, right? Here's the bail bondsman. Here's who to call, all that stuff. And I knew, I networked with some police officers and I said something about that and they laughed and they said, you get your one phone call in X room. That's the billboard you see out that window.
Yeah.
There is no better product placement.
Yes.
Right.
Sometimes you don't need 7 times. You only need the right one at the right time.
And yeah, I mean, I thought that was so funny because, most people, I'm assuming, that's not something they're used to. They don't have that number off the top of their head. But yeah, I mean,
hopefully.
Yeah. And those that don't, that's a different story. But yeah, it's that placement. It's all of those things. But it all comes back to the numbers,
Yes.
and that is the thing. And, so, oh my gosh, we're already at the top of the hour. And because this all comes back to the numbers and people are going, now, Avi, I know that you are in Jerusalem, but you work worldwide, right? And so how do people find you and what are the services that you provide?
So you can find me on my website, PinskyConsulting.com. You can find me, as I said, on LinkedIn. I am on Facebook. I'm not as active there. If you want to connect with me there, that's fine. I'm happy connecting with people there. But as I said, please don't try to sell me SEO services. I'm much more active on LinkedIn and the DMs there. You can connect with me there. If the algorithm makes it pop up in your feed, great. If you search me out, even better.
And we'll have links in the show notes.
Yeah. And my website, Pinsky Consulting, that's where you can find me the most. You could book some time to talk with me, get a free complimentary business wellness check. So what do? I help business owners gain back their time by focusing their energies on the areas that matter the most in their business and driving things forward. We set targets, we set goals, and we set the path towards achieving those goals and achieving those targets so that your business can be healthy. And a healthy business is one that's producing cash flow on a regular basis consistently and is able to provide the money that you need to pay your personal bills and to pay for your lifestyle, right? Because that's why you have a business. And if you didn't have a business to be busy with admin work, you didn't need a business to be busy with admin work. You could have gotten a job to do admin work. You have a business because you want freedom to do with your time as you please and to have the success that you need in order to pay for, as I said, your bills and your lifestyle. And if your business is not creating that success and not creating that cash flow, something is wrong. The machine is broken. You might need a doctor to fix it.
I love it. I love it. And so you're going to do a business wellness check and prescribe a treatment plan, as we mentioned. So I love this. And like I said, we will have links in the show notes to both your LinkedIn profile and to your business. So, folks will have those. Avi, this really has been so much fun. And right, we've been talking, finances, but it's been great fun. It has been so delightful. And I would love to chat with you again. And so we will do that. Sure. But, between now and then, do you have any final thoughts that you want to leave everyone with?
Yeah. We have been talking numbers, we've been talking finances, and most people, I guess I probably should have said this earlier on because I don't know how many people got lost in the fact that we're talking numbers, but the numbers don't have to be so scary. Right? I have a download on my website. You can get my prosperity playbook. Maybe we can get a link for that also. It's on the top of my website. You click for prosperity playbook. Okay. And it's a simple, easy Excel that anybody can use to set the targets for your business. Look at your numbers from a 30,000-foot view. You don't need to do exact ticking and tying of everything. You can look at general numbers and patterns of what's going on in your business and really kind of zero in on what aspect of your business you want to fix, right? Which of those 5 levers do you think you can attack to fix your revenue? I've got 5 other levers for profit, 5 other levers for cash flow. Use that Excel. It's so simple to use. It's so easy. You don't need to be a number maven to be able to understand it. It's not nearly as complicated as your financial statements. So the numbers don't have to be so scary. You just need a little bit of knowledge, and it goes so far.
I love it. I love it. Well, we will have a link to the Prosperity Playbook in the show notes. I am Deb Creer. I've been having so much fun talking with Avi Pinsky. And until next time, everyone have a great day.
Tune in for our next program for even more trends, best practices, and techniques for how to make your business a success. The Business Power Hour, hosted by Deb Creer, is proud to be part of the C-Suite Network.